MRVL technology, ticker symbol MRVL. What is it doing today? We know it's a semiconductor company that designs chips for data center, networking, AI infrastructures. But did you know that it was founded in 1995 by three engineers talking around a kitchen table, starting their idea around a kitchen table? And then this small idea become a major player in all the data infrastructure nowadays. Also, since 2016, the CEO has guided towards a more popular like cloud high-speed connectivity. That's why you see all the hype, all the growth with Marvell. It follows the trend. It's going with the software industries. It's moving towards what is demand. So today let's look at, is it really worth the buy and where to take profit in the near term? Looking at Marvell 3 months outlook, let's read in their fundamentals first and then check out the technical chart at where to buy and where to sell. For the fundamentals, the forward PE is 58.81. Forward PE is like the regular PE but forward looking. It's looking at the future earnings. 58, 59 is a little bit expensive compared to NVDA. It's around 20. So is it worth this price? That's a little bit of concern. Free cash flow 1.67 billion. It's good, but also compared to other chip company like NVIDIA, it is not yet that wow, that amazing. Revenue growth is how much a company sales have increased over time. It's at 40, close to 41. It's positive. It's a good thing. PEG ratio, price earnings to growth ratio. It's like a regular PE ratio, but add a growth factor to the formula. It shows whether a stock is expensive or cheap relative to how fast it's growing. The reading is, if it's around 1, then it's fair value. PE matches the growth rate. If it's less than 1, that could be undervalued, meaning it's at a discount price for us investors. Maybe take a look at it. Over 1, it could be overvalued, meaning we're paying extra or premium for the growth. Marvell is sitting at 1.66. It is a little bit overpriced, but not crazy overpriced. ROE, return on equity, how much profit a company makes for us investors. So it shows how efficient the company is generating money for us shareholders. It is 16%. It is good, but not excellent compared to Micron or NVIDIA. So you would wonder, why is revenue growth so great and ROE, return on equity, is lower? Because the revenue growth shows how fast the company is growing, and the return on equity shows how well the company turns their money into profit. The company could grow very fast, but not generating money. It burns cash, it's investing in other company, it could be doing research on other areas that might not make money yet. And ROE is what we actually, the investors, would get in their hands on what's returned. So there is a balance between both. Looking at all the simple indicators, numbers, it is a medium. It's not like a wow buy. It's a medium, okay number, but it still has very high future growth that people are expecting. Then if it looks interesting, looking at the technicals, is it a good time to buy now? For the technicals, you can see it is well above the 200 SMA. A lot of the chip stock is well above the 200 SMA. So a good buy point is here, around 140. But you would say, you're crazy, it would never come down there. If it didn't, then maybe choose another stock. If it does, this would be a good buy point to wait for it to come down here and snap some shares. Take profit at 320, close to all-time high. And where do you want to cut loose? Meaning you give up, switch to another different stock, company, maybe come back to look at it years later, cut loose around 100 and below. If it ever come down here, go below the 200 SMA, and then swing down here, it doesn't move or keep going lower, that might be a time to say goodbye. Because looking back, there was a time it stayed down there for a while. So within these months, you don't know if it's ever going to go up or is it going to stay down here longer. Best strategy is cut loose or lighten up your share and move to a different stock. When to add would be 160 to 200. This area could be a good add point too. If you miss the first entry point, there's always another chance. The reason I say 3 months outlook is because nobody knows what's going to happen in the future. The technology world moves very fast. They are very news driven, tariff driven, sales driven. If there's a new chip or something spending happen around the semiconductor world, this might get impacted. Doesn't mean you have to panic sell, but it will swing very big. And make sure you have a sell target, cut loose point. Don't buy and hold forever because we don't know what will happen in the future. It could go higher, become the giant boss of semiconductor chip world, or it might disappear. Even though we can't sell at the top, but we can take profit while we can. Lastly, important dates for MRVL. It's earning August 27th. Expected move unknown yet as it's too far. So maybe this will be a chance for it to come down here and last again, or it could come down here and poke below and stay down there. It could go either way. Well, that's it. Thank you for watching. I'll see you next time.